Hello guys, how are you doing this evening? Sorry for the late start here. Uh, I had a meeting and it was at 5 o'clock and I just barely squeezed out of there and uh, made it back to get this out to you. So had no intention of leaving you guys high and dry, but sometimes there are things that you can't really control, and I really honestly couldn't get out of there any sooner. So running a little late here, but we're still pretty close to on time, and we will get started here in a moment. How you doing, Ames? So you can actually tell it's me, Randall, and not Joe. That's pretty cool. Seems like hardly anyone can figure that out. All right, in a moment I'm going to get started. We're going to talk about Bitcoin. We're just going to look over the chart. A lot is the same. We're just a couple things developing here we're going to discuss, and where we think it's going to be headed. Before we actually get started, I did want to do something a little different, and just kind of be just a little bit more personal with you guys. And in the FAQ, in the Q&A, not the FAQ, the Q&A section, if you guys want to ask some more personal questions, you are welcome to do that. I will tell you we're not going to answer everything personal because we do keep our businesses separate from our personal life. So we do that because otherwise we would have no personal life. But that being said, if you do have questions, you want to get to know us on a more personal basis, personal level, I guess, or if you want to ask some questions, we're happy to answer a few questions on that grounds. Things we're interested in, some of our hobbies, that type of stuff. So you can do that in the Q&A. I'm not going to belabor it here, but we are normal guys aside from, what we do here, so we do want to get to know you guys a little bit better as well. Last week we did a stream Sunday morning, and we will be doing streams in the morning again. It's going to depend on our schedule. I mean, I run 3 successful businesses still, and while I'm working on potentially selling one of them, it's going to take some time. It's a large business. It's going to take some time to actually sell that and move it so that will take time. So I run those businesses. I trade full time because that's what I love doing. And then I have hobbies, stuff I do. I have 3 racehorses, and so I have hobbies and stuff, just like the rest of you guys. So as far as the streams go, part of it is really honestly going to depend on our schedules, and so, but we are trying to fit you guys in as well as your time zone. So we are going to be doing more mornings. We are going to do a midweek eventually here, and we are going to do a Forex live stream. It's going to happen. We're just working on dealing with, some other things going on. So, yeah, we sound young because we found the fountain of youth, but we're actually really old. Just kidding, but there are actually some ways to keep yourself young. So, all right, I'm going to jump into Bitcoin here, and we're going to just talk about what's going on. And just give me a moment here. I want to switch off notifications so we don't have that going on. All right. Forex 101, fees, margins. I'm still going to do a video for you guys addressing a lot of that stuff, so that will happen. All right. So let's look at Bitcoin. So this is the Bitcoin chart that I have. Depending on who is looking at this, you will see different charts. So I know a lot of people are still looking at this, and because they're looking at this, they're seeing this as 1, 2, 3. I'm not saying that that's invalid at all. Obviously, you have 3 touches. That's a possibility. It's totally a possibility. And I don't have a problem if you want to change your chart to that. You don't have to just have your chart mimicking us. In fact, I don't want you to sit here and mimic our chart. I want you to take what we have on the chart and the reasoning behind it, and then, make your own chart. So that's the way you should be doing it. But that's a totally valid way to look. It's 3 touches. It did bounce on all 3 touches. Nothing wrong with that. But the one reason why I do have this here is because I wanted to eliminate this area in case this was just developing its own structure. And I do believe it still is. So either way is totally fine. It really doesn't make a big deal. Aside from, here's the one point to keep in mind, is if this comes back up, so if this comes back up like this, if you're looking at this, you might see it as a break. Also, if it comes up there and it's riding the trend line, if you don't have the trend line there, you may not see it. So not a big deal. It's just important that we don't get stuck on trend lines. I guess that's the important thing, is just don't get stuck on trend lines. Be willing to adapt them. If that from here to these 2 points is the most accurate, then go with it, run with it. You need to be willing to adapt your chart as things move. That's why, if you see people, and here's the thing, just last thing about the trend lines. If you see people that are still coming from the top up here, you can't do that. That doesn't fit. It doesn't fit into the structure anymore. So you do have to adapt your trend lines and as the market moves, because the market is going to develop a picture. And if you're stuck on history, you're going to mess it. That's why we don't use indicators, because indicators pull you into the history. They don't allow you to see the future. So one thing to keep in mind. Another point I want to mention, you'll notice that I have this small trend line here just touching 2 points. I want to show you what is possible here. So if you draw this all the way across, that's a triple bottom, okay? This is just something we need to keep in mind. It's important to look at all the possibilities. That's what we do. Very few people do. I know a lot of channels claim that they do. They don't. But we do. We want to look at all the possibilities. This is a triple bottom. So it's something we have to keep in mind. There's a reason why I don't have this trend line completed like that. And the reason why is because if this is just going to develop a little flag here and then continue down, I don't want to get hung up on this trend line. Be like, well, the trend line's there, so it's a triple bottom. Because too many people do that. They're like, triple bottom, guaranteed bottom, this ain't going to go any lower. And they get hung up. You need to be willing to let the market tell you what it's doing. And if the market develops something like this, we're going to need a couple days to see it. If it does, if it develops a flag, then we're going lower. But if I have a trend line that I am seeing as a double bottom, then what I'm going to see is that as acting as support. So it could throw me off. That's why it's very important that we be willing to adjust what we're seeing and be like, okay, the market's developed something totally different. And, if this continues to move upwards or it moves in a corrective fashion, like this, then that trend line is going to be validated. All right. And then we'll just deal with it when it comes back down. So that's the daily. Let's drop it down to the 4-hour, look at this a little bit closer. On the daily, it looks a little bit cleaner. When we get into the 4-hour, it's not as clean. As we mentioned before, this ascending channel within ascending channel. Some of you guys caught this break, and it was a good run. If you got that, congratulations. If you didn't, don't beat yourself up over it. There are a lot of trades, especially in Forex. Last week was a very corrective week. We're coming up this week in Forex is going to be probably more impulsive. We're going to see more impulsive moves. So last week for you in Forex was a little bit slow, or maybe you just broke even or made a little loss. You may make it back this week. So you just got to understand that in trading, it's not the days or the weeks. It's, the months, the quarters, and the year that matter. So it's the consistency over time. It doesn't matter if you took 5 break-evens last week. Don't let that get you down. Just keep working at it, and you're going to get those 2, 5, 10, 15, 20% trades. It's going to happen. But just be patient for them, and they will come. So that's just a little rant. So what we're dealing with here, and a lot of people in the Slack, if you're not part of the Slack, you don't know what I'm talking about. But if you are, a lot of people in the Slack have been asking and talking about and giving some ideas on what they're seeing, some interesting thoughts. Some people are seeing this as the start of a descending channel. It's important to understand that we don't have enough information to call this a descending, not ascending, a descending channel. It's not big enough yet. And let me explain why. This could come back up like this. It doesn't have to go that high, but it could come back up like this, and you'd still have a descending channel. It'd still be a sell. It'd still be a bear flag. This is what people miss. We had a guy who commented, and they're like, on the video Joe did, he commented, and he's like, well, you guys claim to know some new strategy that no one else knows, and it's just patterns and structure, and everybody knows that. It's like, no, everybody does not know that. Everybody you hear talking about market structure and patterns does not teach this. They do not trade this way. I know because we went through everything. Nobody tells you this type of stuff. I know that sounds arrogant, but it's true. People see patterns, and they'll make a pattern, and that pattern and those trend lines will sit there for months. They will not change them. And when it breaks, they'll see it as a break. The way we trade is we allow this to actually adapt. And if this goes back up and it's just forming correction, then that's a descending channel. It's still a sell. However, if it continues down like this, we could get back down to 5,800. That would be a confirmed descending channel. We'd be looking for that to reverse. We'd be looking for the possibility for that to reverse. So it's important that we allow the chart to adapt. And, I do get annoyed with clowns, but, we allow the chart to actually adapt and grow, because this is why so many traders fail. I'm serious. This is the difference between the traders that make 1% and the traders, 1% in a month on a good month. That's a good month. Some people are happy with 1% on a good month. And the traders that are consistently making 10, 20, 40, even 50% in a month. Now, you're not going to have every month be 50%. But there's consistency. There's traders that are consistently making these profits. And the reason why most people fail, and we're going to do a video on this, the number one reason why traders fail. The reason why traders fail is because they get hung up on a trend line. They get hung up on a pattern they see and they don't adapt. I guess I could give you an example, a little example. It's not a big example, but here's a little example. So this is a descending channel. It's a small descending kind of a flag. You could see this as an impulse. It's a small impulse, but that's definitely a corrective pattern. So we'd be expecting this to break to the upside, right? Does it break to the upside? It absolutely does. But how does it break? We have one impulsive movement and the rest is very much corrective, is it not? So if I'd gotten in on this trade, let me just pull this up to give you a little bit of a example. So we have, let's put this here. Even if we get to the top, okay, so that's about 2.42% profit. If we were able to get to the top, I'd probably actually have the stop loss a little bit. So about 2.3%. That's not terrible, is it? Here's the thing, though. This breaks correctively. So what does that mean? When you have a corrective pattern like this, it's a bear flag break. You want to see the impulsive move. If it's breaking correctively, then that just means that we have a corrective ascending channel. So the corrective ascending channel, we're expecting to break, and that's why we were one of the few. I know that there was some. I'm not saying there wasn't others, but one of the few that saw this coming. Here's the thing. I know a couple of you in Slack saw this coming. If you got hung up on this being a impulse and that being a bull flag, then you would be stuck on this being an impulse and you'd be waiting for it to continue up. This is why traders fail. because they get hung up on their strategy, they get hung up on their indicators, they get hung up on things that they believe and they're not willing to change. The biggest thing you can do for yourself in learning to trade is get over yourself. Get over yourself and just let the market move. There's nothing wrong with drawing patterns and saying, that looks like a bull flag. But if it is invalidated, then you need to say, well, listen, this whole pattern, and let me just use this because this is going to make it cleaner. This whole pattern here, for some reason my thing is glitching. That's an ascending channel within an ascending channel. And then this part here is a steep ascending channel, right? It's a steep ascending channel within an ascending channel, and people would call that, okay, well, they have different names for it. I don't really care. It's an ascending channel. It's easy for people to understand. You can call these wedges. You can call them, whatever you want. But that's an ascending pattern. That's all you need to know. If you were hung up on this just continuing up, which so many people were, and we've listened to people on YouTube, and they're like, we're definitely quite bullish now, you might have missed this. So it's important that, I know I'm belaboring that point, but listen, honestly, it could mean the difference between you guys becoming successful and not. The biggest thing when you're starting out trading is not handicapping yourself by bad habits. Okay? That's one of the worst things that you can do, is handicapping yourself with bad habits. And you start doing that for several months, and it's really hard to break those habits. Really, really hard. I can put the EMAs on the chart for you. We can look at the EMAs. I haven't honestly looked at them, but I'm just going to be quite candid with you. EMAs are garbage. They're going to take you. They're going to prevent you from being a successful trader. I'm just going to tell you right now. There are people who trade based on EMAs, and they'll get some trades, but they're not consistent, and they don't know what the market's doing. They're reacting to the markets instead of allowing the market to show them what they're doing. So EMAs versus MAs, the only difference between them is that EMAs, it's exponential. It's more weighted on recent movement. They both have downfalls. You look at this, and you look at the positions that you would have been able to take. Like this move here. We knew this move was going to happen because of this. Look how tight that is. That tells us that we're coming in this pattern. This is going to break. This is most likely going to break. It gives us a lot of opportunity. The EMA was down here before it broke through the EMA. And then, at this point, let me zoom in and show you this because this is really important. You notice these candles here? When those candles were happening, people were seeing this as support. Oh, the 200 and 300 day are acting as support. But what happens? It just breaks through. This is what catches people on the wrong side of the market. This catches people on the wrong side of the market because they see that as support and they're like, oh, wow, the EMAs are acting as support, and so we need to put in some longs here. They get caught on the wrong side of the market, and then it happens both ways, longs and shorts, but, it goes both ways. And I know some of you trade on EMAs. That's fine, I guess. I guess the thing that I have is when I tried trading, combining, like moving averages and indicators with our strategy, we saw a consistent decline in profits. So a consistent decline in good trades. It's not saying you won't make good trades, but see, it's important. This is the last point I'll make on this. It's important to understand that the market does not react to moving averages. Moving averages are a reaction to the market. Moving averages are a picture of where the market has been. Okay, it's not a forecast. It doesn't tell you where it's going. It's not support and it's not resistance. It's just a reaction to what the market has done. That's why it doesn't give you it doesn't help you stay ahead of the market, okay? It doesn't help you stay ahead. Weekly chart. Well, let's look at the weekly chart. So the weekly chart's kind of interesting. You'll notice that I have two trend lines on the bottom. The first one here is somewhat validated. We have 2 touches, not a third touch yet. I do expect a third touch, which would drop us down to between 54 and 5600. Totally expect that to be happening. And then I have this other one down here, which is a lower level of 2600. That's what we should expect when tether breaks. I would be expecting that. But this is totally something that could happen. If we're looking, I know a lot of people have noticed this. A few people mentioned the course. If we're seeing this as the impulse, and then people see this as the correction, that's totally possible. That's totally possible, and we could see this move to the upside. Someone had mentioned earlier, can we talk about the fundamentals? One of the reasons why we're not necessarily looking at this so conclusively is because the fundamentals are not that strong. We're not seeing new money come into the market. As much as people are telling you, they're lying to you. It's not true. Smart money is not coming into the market. I know people tell you that. They don't know what they're talking about. For 10 years, I worked with smart money. I was a consultant for smart money. I know how smart money works. They're not coming into Bitcoin right now. And if the stock market crashes, they're certainly not coming into Bitcoin. Bitcoin is much more risky than the stock market. So we have to understand that until the issues in Bitcoin with the manipulation are dealt with, the possibility of us making a new all-time is much less, okay? I'm just going to leave it at that. It's not as strong. So smart money is waiting for that to be addressed. I'm not saying that they haven't bought in. Smart money was buying in at low levels. There's still smart money in Bitcoin that hasn't been trading. But I'm not saying that they're not in the market right now. I'm just saying that there's no new smart money coming in, and there hasn't been. Smart money is smart. They know more than the average person. The other thing I wanted to address quickly, and this is off the topic of Bitcoin, but people asked, why don't you do more live streams? There are some people that do 2 live streams a day. And I'm going to be carefully say this, but the reason why they're able to do live streams every day and twice a day is because that's all they do. They're not doing anything else. And most of them aren't even trading. So I'm not belittling other people. I'm just saying that we would love to do more. We want to do more live streams. But the reason why, we are a little bit limited is we do run companies and businesses and we do trade. The other thing we need to look at on the weekly, if we're going to be looking at the weekly, is the possibility of this. This is a descending channel. It's quite corrective in nature, especially coming out of here. It's quite corrective. You could see this as a impulse, that as a correction, this as an impulse, that as a correction, this as an impulse. If that is how we want to look at it, that's fine. But this part here is definitely very corrective. So we're moving sideways and in a very corrective manner. What could happen here on the weekly, this is going to take some time to play out if this does happen, is we just get moved tightly into this corner. And then usually what happens in these type of patterns, not always, but usually we'll get an impulse. So we'll impulse in one direction or other. But what the direction we impulse is going to be shown on the lower time frame. So we're going to see that on the daily. That's why we look at the daily. On the daily, still, the impulse is on the downside, and we haven't formed what's going on here yet. We don't really know what's happening on the daily as far as this corrective movement. It just started. So we have to give that some time to play out on the daily to see. But this has been very impulsive. This was very impulsive. This was quite impulsive, for sure. But this move was very corrective. Extremely corrective. So seeing this break to the downside was no surprise to anyone who trades this method. It was something you would be expecting. And because this was very corrective and not impulsive like this, we should be expecting more downside. We should be expecting this to develop out into a bigger flag. Now, breaking back down to the hourly, here's what I'm looking at as a possibility, because I know some people are saying just shut up and stop ranting and just talk about what Bitcoin's doing. Here's the possibilities that I'm kind of looking at. This is what was developing out, okay? That's pretty much a flag to continue lower. It did break down, but it immediately came back up. We didn't make any progression. The market didn't make any progression. So I'm inclined to ignore this part because there's no progression in the market. It doesn't add value. And just see what's happening either from this point, like this, or you can even come from this, just ignore that whole area. It doesn't really matter. Just see what happens from here. If we get this kind of corrective movement, whether it be sideways or a little bit ascending, I'm really going to be looking for this to sell. So that's kind of what I'm looking at. Now, as I mentioned before, if this continues, ignoring this part here, but if it continues just this descending nature, very corrective nature, I'm going to be looking at this as a reversal. And the possibility this is coming back to the upside. So that's the scenarios in the market. It gives you a clear indication of what will happen as this develops. Right now, I'm just going to be honest with you. There's not enough information in the chart to make a wise trade right now. There's not a good trade right now. So there's times when you need to be patient and wait for things to happen. You know, like I mentioned, Forex last week was a very corrective week. There were good trades. You could make percentages, but it wasn't an amazing week. It wasn't an extremely impulsive week. So you have these weeks where you're not making those big gains. But it's an opportunity to learn. You know, you can really dig deep into the charts, delve into the charts, and just learn. We can talk about 5,200. It is a point. There is a reasoning behind that. Let me just do that. So let's do this. Try and get as close as I can. There we go. Now let's go to the daily here. Maybe the weekly might be actually a little better here. All right. So this is one of the reasons why people are seeing 5,200 as support. It's basically this area here, which has seemed to react to that point. Again, there's one thing you need to keep in mind that often, and this is happening a lot more in Forex, and it's starting to happen in Bitcoin. So mark my words, as Bitcoin develops and matures, it's going to happen more and more. And what it is mass psychology, where you get the masses caught on the wrong side, where, for instance, let's say we come down here, we test this area, and we kind of just move along this line. You get all the people on Twitter and YouTube saying that's the bottom, definite bottom, or maybe we even bounce. Let's even say we bounce, okay? So we come down, we bounce off that area. People will see that as support, and this is the definite bottom. It's definite bottom. It's not going to go any lower. It's mass psychology. You get people caught in a bunch of longs, and then the market just moves a little ascending nature. Bam, it heads down, and that could be the time when we won't go to zero, possibly, but that could be the time when we do make that next big low. So be careful that you don't get in that mass psychology where you're going by the same things everyone else is, where this support line, it's not going to go below that. That's the only thing I would say. As far as it going down to 5,200, I would see that as a possible area for a short-term bounce, or at least a hesitation. But honestly, anywhere between 51 and 5,400 it could happen there. And the reason being is between 54 and 5,600, you have this trend line. And anybody looking at this trend line would see that. So, you have to keep that in mind. All right. Enough ranting there. Any questions on Bitcoin? If you look at the 15-minute chart, I know we said we should ignore this. That does look like a pennant or flag. I wouldn't place a lot of stock in that at all, but I'm just saying 15-minute is showing it as a flag. often you'll see that it develops. I wouldn't go low in the 15-minute and usually want to stick to the 1 hour. But often the 15-minute will develop and the hourly will follow it. So it's not unlikely that this pattern will continue into the hourly and the 4 hour, and then it could develop the pattern to drop. Anybody who makes predictions based on dates is not a true trader. They're not a successful trader. The reason I say that is because there's nothing in a chart that will ever tell you a date. Nothing. Now, you can get lucky, and you can make pretty good guesses just based on how things have been moving, how correctively it's been moving. You can say, well, next week or next month, it should be around here. And you can be quite accurate a fair amount of the time, but nobody can tell you specific dates where any currency, whether Bitcoin or Forex, will be. Nobody can. And when they're right, they're lucky. Because the chart doesn't tell you stuff like that. It doesn't care about dates. Just to give you an example here, let's just go back to daily. Okay. Okay, so when we hit this area here, 9,700, we were developing this pennant. Interestingly enough, people in TradingView and other, YouTube and whatnot, they will see pennants for bulls, but they miss them for bears. It's interesting. But you can see this as an impulse, a pennant, and a continuation to go higher. It starts out impulses. At that point, it had looked like we'd broken a trend line that was in place at that time. We were telling everyone that it was a false breakout because we didn't have the momentum wasn't continuing. It wasn't following through. It went from impulse to correction. So we were telling people this is not sustainable. It's not going to happen. It's going to go back down. We were ridiculed for a while. We were trashed quite highly at that time. We were one of the few people that were telling people that because it's not very good for business to tell people that Bitcoin's going to drop. It's better to tell them it's going up. So we told people that it was going to go down because of that. It goes back to the understanding that things develop. You can't just say, well, that was a pennant. It has to, continue higher. So if we look at this a little bit closer, you can see on the 4 hour you have a lot more detail. You have your impulsive move, your corrective move, your impulse. You could say tiny correction. I'm just going to say this is just one big impulse. On the 4 hour, on the 1 hour, those are little impulses. Okay. When we get to this area, there is something very important that is happening. Okay. So this is a little historical lesson from Bitcoin. But there's something that's very important that's happening. Yes, this is impulsive. You could say that's corrective. After we get through that, the rest of this is just very corrective. You're not making a lot of progress. We have this impulsive move up, but then it just retraces most of it. Very little movement. And we're just in this pattern where, we went from 10,800 to, 11,000. I think I'm actually talking about... just hold on here a minute. Yeah, I'm talking about a different time period than I was before, but it works anyway. I went back to the older one, but it's still held true. It's the same idea because this is the way markets move. So it turns from very impulsive, corrective, into this more corrective move, and then we get this impulsive movement up and an extremely impulsive move down that just retraces the whole thing. And that would have given you an indication you need to get out of, you need to sell. Looking at this move here, coming up to 10,000, which is what I was planning on talking about, wasn't the other one. Very corrective. We do impulse from it, but immediately go back into very corrective. When you have that happening, you need to question if this is going to be able to go higher, and then it breaks down. So this is why we knew that it wasn't sustainable. It was going to come back to the downside, and why we predicted that. And the reason I bring this up is because this is stuff that you guys need to be learning so that when these things happen, you don't have to count on us. Not that we don't enjoy these live streams or talking to you or teaching, but so you don't have to count on us. If it's in the middle, of the night, and we don't have a video out, you are not caught off guard because you know what's happening, because you know this style of trading. Matt, you may feel that way, and maybe it is true, but the way I teach is I do repeat a lot because it's the best way to teach. It's the way people learn. People are so ingrained in their habits that it does take repeating it a lot to get it through for people to actually listen. So I would disagree with you because the amount of people I've taught in my life, it's been very successful. But I do appreciate the comment. There's truth too. I do rant a lot. You're not wrong there. How do you tell when the bottom is formed? Is there a certain period of consolidating before it's considered bottom? No, there isn't. There's several different ways. So we can look at this here. And we're just for a moment, we're just going to ignore manipulation. And we're just going to focus on the chart. Okay, so we know that manipulations happen. We have been warning about it. But we're just going to ignore it for now. There's a couple things we can look at. First of all, when you have, in the course we teach about the only wave theory that works. If you are in the course, you've went through that lesson. It's powerful and it's something you need to understand. But basically it's the idea that the market will not just continue impulsing downward. It's going to impulse for a certain amount of time, correct, impulse, correct, and then it's going to form a bigger pattern, and it's going to tell you what's going to happen. So we have this impulsive movement, we have a correction, we have an impulsive movement, we have a correction. Then we have what looks like another impulsive movement, but it forms a slightly descending tiny corrective move. And out of that corrective move, we have a very bearish candle, which is retraced completely by the next daily. When you see this happening, after you've had the impulse correction, and then this impulse, it means one of two things. Either you're reversing, most likely, or it's developing a bigger pattern. Now, what happened from this is we developed this bigger pattern, which is an ascending corrective move. We could look at it like that. Just ignore that part of it. Ascending corrective move. And we could say, okay, well, this is going to break down. Does it break down? It absolutely does break down. Okay? So we dropped from 6,700 down to 6,200. You could have made money on that move. But it isn't sustainable. It goes, we have one bearish candle, and then this sideways corrective movement. When you see that, you're like, okay, this looks like it's developing something different. And out of that kind of sideways indecision, we get the impulse. It just turns around. We get the correction impulse. And then we get this pennant. We'd break this down on the hourly on the 15-minute chart. On the hourly, we could see. We'd be able to see the reversal on the hourly. So this is where you get your clarity in the market, is understanding that the market cannot sustain moving in one direction for too long. And when you realize that, then after you've seen those impulsive movements, and then you're seeing it start to not look like it can continue, you're looking for those signals that it will turn around. Now, that retrace candle, we saw that here. Okay? That did happen here, but then it broke down. But this was a very much a tight bear flag. I mean, it just was a perfect bear flag. This was not. Okay? So, expecting this to move to the upside, and then for the market to tell us what's happening, it played out exactly. So then, let's look at it this way. Let's see this as a reversal, descending channel. It bounces. We have that retracement candle. Let's look at this as the impulse coming out of this reversal, and then look at this as the correction. Yeah, we do have that impulsive candle, but it's not sustainable. Then we get this impulse out of it. It makes sense. So you have to be careful that you're not so caught up on, okay, impulse, impulse, impulse. This is just going to continue down forever, that you're willing to look at the other side of it and say, well, this is quite a bit corrective, but this may be the impulsive start of the movement to the upside. So that's kind of what happened. Hopefully that answers some questions, gives a little bit of clarity. But as far as reversals, if you've hit a trend line that has at least 2 points of confirmation, so the current hit would be a third point, you'd be looking for those retracement candles. They're very effective, very, very effective. The other thing, and I will mention this, and we'll drop down to the hourly. Let me see if I can give you an example of it. Give me a moment. I'll find an example. I want a good example. Okay, right here. This is a good example. This is a perfect example. Okay. I'm going to actually zoom out a little better. All right, so we have this movement here, a very corrective movement. It is a flag. It's a sloppy flag, very corrective. At the end of it, we have ascending nature. It's important that we are looking at that last part of it, because that's the part that broke down. But ignoring that, I want you to look at what happened here. You have this arcing nature, this rounded top, okay? So you have this rounded top where it kind of very correctively moves up, kind of moves a little bit sideways, and very correctively rounds off. This often, when you're at a trend line or you're at a crucial point in a chart, this is a good signal. Now, you can't just take this out of anywhere because it does happen within the chart elsewhere. But at crucial points in the chart where you're looking for that possibility for a breakdown, for instance, this ascending pattern, we're looking for that breakdown. At the end of it, we get this beautiful arcing nature, very corrective nature, and it just breaks impulsively out of that. All right? So very arcing nature, it impulses right out of it. Okay, Crypto Dave, you need to stop, okay? We're going to have to... Now I went to a different chat, okay? If you're not interested in listening to what I have to say, then goodbye, okay? Okay, so this isn't about you. This is what I'm sharing, and I think most people are appreciating it. So stop spamming the comments, okay, about FUD. It's just nonsense. We're not listening to it, okay? So either just listen politely or goodbye, okay? All right, so just finishing that, because this is really important, and for those of you who actually care about being successful traders, jot this down, write it down in your journal, okay? Because these are the points that that are going to help you make those good trades. I just want to show you the difference here. So we see this, actually, you could have taken a position up here at the top. This would have been a really good position to take. Right here you have 10% just in that move to the downside. You might have gotten out sooner because this is a descending corrective move. Even if you'd gotten out to be safe there, that's 8%. Okay? So, but you're not going to catch this move unless you're aware of these little nuances how the market moves. And it doesn't always work this perfectly. But there are other things to look at as well. For instance, you get this ascending channel. If you get, instead of this very rounded movement, okay, if you get a descending right along the trend line, that's a reversal sign, okay? That's a reversal sign that you're most likely going to move to the top side. Likewise, if you break through the trend line, but you're still moving correctively, I'm still looking at that as a sell. So it isn't always going to be picture perfect with, the reversal right on the trend line. It's not going to always look that perfect and just be all perfectly rounded. But sometimes it just happens. It just totally works. And when it does, it's beautiful. And these are the trades that are awesome, is if you can get in on a trade that's 10%. And this move happens, 7th August to date. That's just one day for 10%. $10,000 account, that's $1,000. It's a pretty decent amount if you're trading more. And I'm not telling you to just throw your money in, but I'm just saying this is where you make your profit, is catching these moves, getting in tight. And we're going to be talking about and dealing with stop losses and stuff too, because that is something people talk about. But I did want to take a little bit more time on that, because this is the difference between getting in on the trade, and this is what I was going to mention, but I got sidetracked. If you're looking at it like this, it's all the way down here, and by the time you get in, if you do get in at that break, it starts correcting, it moves up, you get scared, and you're like, well, I should get out. So it's like, that doesn't get, you need to be on, you want to get in on the impulse when it starts, not get caught in it later on, hoping that it continues. Because it could have stopped there. Could have happened. All right. Can you say how many BTC trades do you usually do in a week or a month on average? The way I trade based on what is setting up best. So some weeks, honestly, I'm pretty much just trading Forex. And then some weeks, Bitcoin's just beautiful. It's just got beautiful setups, and it's like, yeah, I'm going to take advantage of that. As far as how many trades, I mean, I'll just be honest with you. There's some weeks that I make 1 or 2 trades on Bitcoin. That's it. It just doesn't give me the opportunity for me to feel like I want to jump in a lot of trades. But I will also tell you that there are opportunities I don't take that I could, simply because I can put that money into a Forex trade, and I just know that that's a really good trade. Like, I know there's 10% in this move on, Euro USD. I'm not going to put it in a trade on Bitcoin that could possibly bring me 2 to 5%. It just doesn't make sense, So it's understanding what are the best moves. If you look at, I have just a mumble jumble of a bunch of different charts here on my watch list, but I also have crypto list. I have my dark horses, which are charts that are setting up, but they may or may not be ready for a week or two, but I'm going to still look at them. So it's like, these charts could happen this week, but they may not happen next week. So I separate those. I have my Forex list that I'm looking at. I have my top 6 list, which is my Forex list. And I have my regular watch list and my weekly list, which is my weekly list of Forex pairs and crypto pairs that I'm looking at. And honestly, right now, I'm pretty much just trading Bitcoin as far as crypto. I'm not trading alts right now. I haven't been trading alts for a little bit now. I know some of you are. The reason why is because the risk reward right now, for me, again, for me to put my money in that, it's not there. It's not there for me. So, but there's some people in the Slack group that are trading, and some of them are taking some of these trades that I'm not taking on Bitcoin. They're seeing them, they're taking advantage of them, and they're making percentages on them. So there's nothing wrong. I'm not telling you that you should only be taking 1 trade a week on Bitcoin. Just saying it's up to your preference and what you have available. Some of you guys really love Bitcoin, and that's what you want to trade. And you're seeing the opportunities. You're seeing them play out, and you're trading. There's nothing wrong with that. No, it's not based on being busy. It's based on the opportunities. So if there's the opportunity, then I'm going to take the trade. But there are times when there's a week that goes by and there's only 1 to 2 good trades on Bitcoin. Really good trades. And, I want the really good trades. I'm not really interested in the 2% trades on Bitcoin. Just not happening. For Forex, I trade a lot more in Forex. Like, I'm trading literally every day in Forex usually. But it's not the quantity of trades you make. And this is where people get hung up. It's not the quantity. It's the quality of trades. For instance, if you had caught this break here, this reversal, and I know that there was manipulation in this area, no doubt about it, but still, you still have that arcing nature. And because we have had several impulses, we're expecting the reversal to happen. If you'd caught this and rode this all the way down, just looking, say we got in here, even if we have a really big stop loss. If we caught this all the way down, that's 4% with almost 5% with a big stop loss. If we knocked it down here, we're getting almost 7% on that. It's the difference between being able to see the market making the corrections, staying in, and seeing when the market is developing something else and getting out before you lose profit. So there is a part of this that just, it develops over time. It's something you learn, where you're not giving money back to the market, but you're also being willing to get out if the market is starting to develop something totally different. For instance, coming out of this out of this impulsive movement down, you could have seen this and been like, oh yeah, here we go again. We're going back down. It's going to happen. And you could have got caught on the wrong side. So it's really being open-minded and allowing the chart to speak for itself. It's about back testing and seeing how these pairs are reacting historically. For instance, again, this movement here, you look at the last part of it, and that's where we get the opportunity to short it. If you look at the whole thing, it doesn't give you the opportunity to get in tight. So it's just little nuances you learn, and yeah. Yeah, no, I don't believe Bitcoin's going to zero. But I also don't believe that if the price goes really low, it's useless either. I don't believe that at all. The reason being is the dollar is not useless. The euro is not useless. These other currencies are not useless. So if Bitcoin simply turns into another form of currency, which could be the future, eventually we're going to go to a cashless society. It's going to happen. It might be 20 years, 30 years. It's going to happen. If it just turns into a currency that's worth, $1 or $10, that doesn't mean that it's worthless. It could just go to pot and just get kicked to the side, and then somebody will come up with something new. Or it could be adopted as another form of currency and be traded like a Forex pair. So you'd have USD Bitcoin and be traded just like a Forex pair. And the thing is it really doesn't bother me if that were to happen, because there would actually be more percentages, better percentages to make if Bitcoin was $10 than being $6,000, because you'd only have to invest a smaller amount. So yeah, it would be a definite blow to the market if Bitcoin dropped to $100 or $10, and it might be a blow that takes years, or it may never come out of it. But it doesn't mean that has to happen, and I don't really think that is. I think that's like the worst case scenario. Yeah, right now I trade Bitcoin and Forex. That's what I'm trading right now. I'm dabbling a little bit in looking at some stocks for some long-term investments. But yeah, I mean, I do keep an eye on U.S. oil and gold, silver, and stuff like that. But I was also looking into the crops, like wheat and soybeans and stuff. Corn kind of interested me. I can't recommend any stocks here right now. I am not heavily investing in stocks right now, so I don't really feel qualified to tell you that. If I do look at some stocks that are good investments, I might mention them once I've done the research and looking at good positions. So good at looking at breaks and downtrends, horrible at figuring out on uptrends. How do I gain more confidence? Part of the reason why that is because Bitcoin right now, and I assume you're talking about specifically Bitcoin, but Bitcoin is in a descending channel. It's in a bearish channel. A lot of even the Forex pairs have been in overall a more descending nature. There's some that have been in long-term ascending, the more bullish. Some people just find it more natural to short the market. Some people find it more natural to go long on the market. How do you gain confidence? I would say one of the ways is to go back and back test. And how you can do this is use a replay function. You would just go back to, maybe the beginning of the year or whatever, what you would do is you'd actually you'd use the garbage can, delete all of the charts, and then you just go through the chart and you would just act like you're trading. You won't actually be placing trades, but you'd act like you're trading the market. And so you'd come to a point, like you can't see the rest of this, and you come to a point and you'd be like, all right, I'm going to set an entry there. And then what you do is you'd set it up on your chart like this. You'd figure out your stop loss, how you would do that, and the profit, and then you'd do the replay and watch it play out. And you would use Excel or Google Sheets and you'd put it down, your profits, your losses. What you would do is you would write down whether it's a long or short, and you'd look at the market and see how many longs you've missed. Have you missed a lot of longs? If you haven't missed a lot of longs, maybe there just wasn't a lot of opportunities for longs. And maybe the longs, like for instance this, on the 4 hour, let's go back here. Well, let's just look at the 4 hour. I'll make my point on the 4 hour. You might be looking at this and say, well, this is a very corrective nature. Yeah, impulse, then an impulse, very corrective moving out. You might have actually been expecting this to be a sell if you weren't really experiencing the market. So you might not have taken a long on that position. Maybe you'll notice that a lot of the moves on the bearish side are actually more clear. It is true in some charts. Some of the moves are more clear on one side or the other. It's all right, Dave. I mean, it's not upset. We have to keep things clean, and, we do this free. We give our time freely. I used to charge a lot of money per hour to do consultation. So my time is worth something. And I'm not being arrogant in saying that. I'm just saying, we do want to keep it clean and productive, I guess is the point. But it's cool. No hard feelings. All right. I might have missed some questions. So if there are any questions still on Bitcoin, I will give you like 5 more minutes to address this, and then we'll look at some other charts. We'll address some other things, because I know people are talking about Tesla and Forex and weed and all that stuff. Can you please go to scenario again? I'll go over this really quickly, as people you dump your questions for Bitcoin in the chat. Otherwise, we're going to move on. So just very quickly, and then we're going to be moving on here on the daily. We could be looking at this as a triple bottom area. So 1, 2, 3. So we're looking for this to possibly move to the upside. If we drop it down to the hourly, it's quite messy, quite corrective. We have this area, both of these moves, bearish and bullish, were manipulated, so we ignore that area. But overall, this is looking descending. If this continues ascending, we're, again, looking for the possibility for this move to the upside. If, however, instead of it moving down, we start to get that corrective nature to the upside, then we're going to look at this as a flag for a sell. The other possibility is that we get a tiny correction here and it would just impulse out of there. If that happens, we'd be looking for a confirmation, a correction, a bull flag rather, to get in to move to the upside. Right now, there is not a good position to get in on. So any position that you would, any entries you would be taking right now would be somewhat risky. I'm not saying they couldn't play out, and I'm not telling you shouldn't do it. For instance, if you were to take a position here, you would want to have it quite a bit down, just because it is a descending nature. Even if we get to the upside, there is 3.42% in that move, but the possibility of you losing the 1%, So that's pretty much what we're looking at on Bitcoin. Look at IOTA. It's a good idea to hodl BTC for 10 years. I really can't answer that question. The only thing I can tell you in regards to that is I am not going to hold Bitcoin for 10 years. not at this price. If you had bought in at, 50 cents or $1 or $10, even $100, I would be selling some of it so you make profit, and then, maybe hold some, because just on the off chance, that it does go high. But 10 years, a lot can happen. And if your whole investment is tied up in hoping Bitcoin goes up in 10 years, and Tether does crash it, and it does stay in a sustained, even a sideways market, at 3 or 4,000 or 5,000, even 6,000, I don't see that as the best idea. And because we can trade these moves every day and make money, I would see that as a better opportunity. What do I think of Wyckoff accumulation theory? I think that the idea of supply and demand is at the crux, at the foundation of economics. I think Wyckoff accumulation and the way it is used by YouTubers is total nonsense. The ideas that people come up with, and the springs and the bounce areas and where smart money's coming in, it's just total off the top of our their head. It's really not based on facts. So the theory, as far as supply and demand, total sense. The idea that you can use that to tell when smart money is coming in is total nonsense. Last long position. I'll show you here on the chart. Actually, I'll show you on the 4 hour. I guess it's going to be easier to show you on the 4 hour. Okay. Okay, so the last long position that I actually took in Bitcoin would have been the move coming out of here. And the reason why I took that position was, I'll use this, it'll be clear, I was seeing this as a pretty decent opportunity as a bear flag. Yeah, it wasn't, there was quite a bit of correction here, but I was still seeing this as an impulsive movement. So the last long was there. It didn't really pay off. I mean, yeah, okay, it did move up like $400 or $500 there, but it really didn't. I guess what I'm trying to say is a move like this, I'm getting in a move like this hoping for the bigger move. So hoping it hits the trend line. You get like 7,700 or 8,000. You get that bigger move. And it's not really greed. It's just understanding that I don't want to risk 1% for 1.5%. I want to risk for a good amount. So, those at least 3% trades is what I'm looking for. There's nothing wrong with a 2% trade. It's just I'm trying to, get the better trades. So as far as Bitcoin goes, I do look for the better trades. Trading this was really good, like the guy mentioned. Shorting this was really clear. Going long in here was quite a bit sloppy. So if you'd gotten in here and hung out whole way up, it would have been awesome. But there's a lot of corrective movement, and it would have been a little hectic on the way up. I don't believe in any stable coins. We do not use any indicators. I've mentioned a couple times that once in a while I look at RSI. The frequency of me looking at RSI has gotten so slim that literally I don't do it anymore. I mean, I was doing it just out of curiosity, but I just don't need it. It's not something that I actually need. So no, I don't trade with indicators. RSI, if you're going to use it for divergences. That's where it's powerful. They can play out very powerfully. That's how I would use it. I'd be careful using overbought and oversold. It's not a good way to trade. It can catch you on the wrong side of the market. Yeah, it does work sometimes. It's just sketchy. Most of the other indicators are pure garbage. They just really are not beneficial at all. And this is based on actual back testing by not only us, but actual studies done. Like moving averages are consistently negative. MACD, it hovers right around the 50% line. So there are months and years that you'll make money, and sometimes you won't. The best trade that I made in Bitcoin. Probably the best trade I made as far as from return on investment is concerned would be a trade where I took a tenth of a Bitcoin and I turned it into almost a Bitcoin. It was like 0.85 or something. It was very close to a Bitcoin. That was probably the best return on investment I made. It was really quickly, in the span of several hours. But that was probably the best trade in Bitcoin I made as far as return on investment. Yeah. It was probably the smallest trades I've made too, but sometimes you don't really need to put in the big amount. Sometimes, a tenth of a Bitcoin on a good move, you have 20 leverage, it'll happen. Just looking over some of the questions to see. Anti-hodler, that's a personal decision you have to make at some point. I really don't feel comfortable telling people not to hodl, but I'm not holding Bitcoin. Not at this point. I've held it several times over this year, where we've had clear indication the market was heading upward. It was more bullish. We're still in a bearish trend, but it was more bullish. So there were several times where we did hold it for a while, but I'm not holding it right now. I don't have a consensus to do that. When Tether collapses, there'll be no buyers, so your stops would be pointless. When Tether collapses, it's going to be a rough time. That's for sure. The one thing about when Tether collapses, there may be possibly a period of time where Bitcoin soars. It's something you have to keep in mind. And the reason why that's a possibility is people will go crazy into Bitcoin and then suddenly it will start tanking. This is a possibility. It doesn't have to happen, but it's a possibility. And then it would start tanking and people would be clamoring to get out, and suddenly it's possible, I'm not saying it will happen, that the fiat options will not be available and you have to go into Tether, and then Tether becomes pennies. It's worthless. So you're stuck with, it's possible. It's something that's possible could happen. It doesn't have to happen, but it's possible. Brock Pierce being arrested won't change much, I don't believe. He's not the only clown and crook that runs Bitfinex. Yeah, I know. There's two groups of people with Bitcoin. There's the people who are so stuck on it that it's like the gold standard. It's got to, make its way through. And then there's the people that are so convinced that Bitcoin has to die. And we're in neither group. I guess because of trading Forex and where we come from, we're a little bit more open-minded and, letting the market do what it's going to do. I'm not willing to get into either group. I'm just going to trade the market as it comes, and when Tether collapses, I'm going to deal with that when it happens, but I'll be making money on the way, so it's not a big deal. I was on BitMEX. I got out of BitMEX. I was trading on BitMEX, doing quite well on BitMEX. I didn't feel comfortable trading on BitMEX and then coming on YouTube and telling you guys, hey, you shouldn't trade on BitMEX, they're crooks. I felt like that was kind of being hypocritical. Some of our students in Slack do trade on BitMEX. I don't have a problem with that. I don't hate you. Don't think you guys are bad people if you do. But it was just a personal decision for me. We've heard of Alessio. We've talked about that before. He's a great guy. Good guy. Very knowledgeable about a lot of things. Very good understanding of the UK market. London market. I don't like the way he trades because, again, it is pretty much the standard way to trading. It leaves a lot of opportunities off the table and places you in positions where you could lose money. I would venture to guess he is a successful trader. just because he does seem honest. But I don't know him personally. I can't try Deribit because they don't allow it in the US. We're gonna do Q&A in a little bit, but let's jump into some charts. Let's look at some other charts here. What do we want to look at? Someone asked about the DXY. Let's look at the DXY. I got my scribblings here. I'll get rid of those for now. Okay. So this is what I'm looking at on the DXY. It might look a little sloppy, and the reason why I have it like this is because the DXY is actually in a position, and if you want to look at some crypto, I can look at some crypto in a moment here too. So if you're not interested in Forex, that's fine. But I do want to talk about it for a moment. I lost my train of thought. So DXY, this is the US dollar currency. It's in a position where it could go a couple different ways. If we look at this on the weekly chart, this is what I'm looking on the weekly. We have this long-term trend line, this very much ascending nature. We peaked out here, and then definitely peaked out at $1.03. And then the market has just been trying to find itself. On the weekly, this is kind of interesting what we're developing here. So we could be looking at this as your impulse down. This is a correction. You definitely have an impulse down. So there's two ways that this can go. Take it easy there, Nada. I appreciate you joining us. So we could see that as the impulse down, and then this this reversal movement, and we're headed up. But we could also look at this as correction, then impulse down and move into a bigger correction. Does that change anything? We're still going to the downside. So that's a possibility. It's something we have to look at. There's a lot of interesting news on the DXY right now, kind of more bullish news. Obviously, we've had the good news about jobs and some other things. And then there's some negative news that's kind of waiting to come up. I'm not really too worried about the news as per se, because the chart has been developing pretty well. So that's one possibility, that this is definitely just a bearish flag, a larger bearish flag, something to look at. We also have to consider that we have this impulsive move and then this very corrective ascending move coming off it. An ascending corrective move sell. So does that invalidate the other position? Not really. We could see this come up like this. It doesn't have to do that, but it could come up a little bit more and then sell. That would fulfill the ascending nature. We could sell all the way down to, this low here, and we could go lower. That's possible. We don't know at this point. But the point is, this ascending nature, it doesn't necessarily mean that, because this could be a reversal, ascending within this bigger pattern, which is just a sell down to here, and then we could get something developed bigger. The other possibility, and this would take longer to play out, but we could get this sell, could go down here and then form something else, more along those lines. Then we would be looking at this descending channel. So it's important, again, like we've been stressing here, it's important to let the market develop. This is the weekly, so this is kind of the bigger look at where, not Bitcoin, where the DXY could go. If we drop it down to the daily, we get a little bit more clarity, and it gives us better opportunities. We kind of have this impulsive movement, and then this could be more corrective movement to the upside. So we could sell from here. It's something to consider. And, it's just really again, it's letting the market really show you what's doing. Right now, nothing has, if we drop it down to the 4 hour, let's look at the 4 hour for a moment here, because this is where I had my everything drawn out. So I've drawn these patterns out just You know, if they get invalidated, fine. Then, you know, I will adjust them. So these are, nothing is set in stone. It's like this could definitely be here, and this could definitely be here. We could do something like that, and we could see this as impulse correction, move to the upside. Could be. It's a little more stretch. It does have that hover pattern, you know, so it could happen. I'm trying to look at the most recent and what's most likely to happen. TVC, it's actually DXY. It's the US dollar currency, so it's the weighted US dollar currency. It gives you an idea where the value of the US dollar, so that when you trade like Euro USD is very much tied to the DXY. Robert, there's lots of markets going up right now. Lots of them. There's lots going down, lots going up, but you can trade either way. Okay, so that's the 4 hour, the 1 hour. If you break it down a little more, it gives you a little bit more clarity. So descending nature, you get that impulsive break, but so far it's not looking like we're getting that clear correction to move to the upside, right? So this could develop out. We could get that clear correction, and we're going to drop it down to 15 minutes just to get a little more clarity, and then we definitely buy that. Or this could be just moving very correctively like this. If that happens, then we're selling that. The reason why we're seeing some of this like indecision is because of all the news in the market. People are not sure. They're not sure where the market is going, so we're getting this kind of indecision. When the market actually shows you a clear picture, I really believe we're going to see some pretty decent moves on DXY. Like we saw here were some decent moves. I mean, these were some decent moves happening. Some good opportunities. So I break it down a little bit more. I kind of am ignoring this part again, just like Bitcoin. It really doesn't add to it, and there was no progression made there. So I'm pretty much ignoring that right now and just focusing on the last part. I feel like it gives us the best. So that's kind of what I'm looking at. If you drop it down to the 15-minute here quickly, it does look like this descending flag is playing out nicely. That looks like a really nice flag compared to the 1 hour, the 4 hour. So we get a little bit more clarity on the 15-minute. If this translates into the hourly, it's going to give us a buy setup. All right. So that's something to keep an eye on, and something that I'm looking at in the week to come. If we look at the Euro USD, because it kind of gives us that mirror image. So think about it. If the DXY is heading up, then we would be expecting the Euro USD to be heading down, right? So again, this is kind of interesting, and I'm not going to make this perfect, but I do want to make the point. This is, again, the 15-minute. So you have to understand it is the 15-minute. But on the other hand, we can glean some potential forecast here, some things that could happen. So again, this could be a kind of a hover pattern, and then if this develops up, we get that second touch. I'm going to look at shorting this just because it really depends on if we get that retracement candle. I'm going to see how it, but I'm looking at the potential for the second touch to get in a position. We could get a second touch and then a third touch. If we get a third touch, that is a great place to enter. That'd be an awesome entry. So it would be a very good place to set up a trade. But the reason why that may not happen, we are getting this tight ascending on the trend line. It's possible that this will sell shortly from here. So again, it does correlate with the DXY, but it's something to look at. That's the 15-minute chart. Again, we're looking at that as a possibility. But we also have to look at the possibility of the inverse of the DXY, that descending nature, okay? So it's important to look at both of those. If this does this, and we get that bounce or that movement on there, and then we see retracement there, if you're in a short at that point, might be a good idea to look at liquidating that short, or at least setting it to break even, so you don't get caught out. But if we do that, it just confirms the descending, and then we're looking for that to be a buy setup. So by doing it this way, we're not telling the market what it's going to do. We're allowing the market to tell us what it's going to do. We have two setups. Either one could play out, and most likely it's going to play out very shortly here within the next, day or two. So that's something to look at. That's a 15-minute chart. You're looking at on the 1 hour. Again, we don't have as much happening, but you give it till tomorrow here, and we could see this develop out. And if it develops out a clear bear flag, then I'm definitely getting in on that. So it does give you something to look at. This is still ascending in nature. So you have impulse, small correction, that's sloppy. Impulse, corrective movement, then bigger corrective movement. This could just be the impulse correction along the trend line to sell. That could be exactly what's happening. And if that happens, that pans out, we're going to see that happen as it develops over the next day or two, or even the next few hours. We'll see how that develops. It'll be a good trade. Copy and paste. I'm not sure what you mean by copy and paste, but again, going back to my original point, you need to not get caught up on your trend lines. So it's a good idea once in a while just to trash your whole chart and just start from the beginning, because you might have charted something that really doesn't fit, but you've made it fit and your mind thinks it fits. It's an art. It does take time to get used to and get better at, so don't beat yourself up. But yeah, definitely just trash the chart once in a while and just start from the beginning. Go to the weekly and just redraw everything, and don't force it. Just look for the recent price action. For instance, here, I am keeping it here just because it fits with the bottom trend line, so it kind of makes it more parallel. But I could move this trend line. I won't move it. I'll just draw a new one. I could move it down to here. There's nothing wrong with that. The reason I haven't done that is I didn't want it to get in the way of whatever Bitcoin, I keep talking about Bitcoin, whatever the chart is developing here. So I just kind of wanted to focus on the chart. If you look at this, the bigger pattern still could be the buy. So everything we've talked about on the lower time frames as far as a sell, the bigger time frame, we're still looking at the possibility for this to be a long-term buy. Okay, so that still looks like it will play out in the long term. Don't move. I moved, sorry. Are all automated trading software scams, or are there modest profits made? They're not all scams. There's some that are profitable, but they tend to be profitable for a short time in specific trends. And there's two big issues with even profitable software. Is one, the bot doing something wrong, so a glitch, it messes up your whole account. Obviously, you have API issues that could happen. The other issue is that it can't adapt to new information from the market very easily. So it has to be largely based on indicators usually. Some of them are getting better at setting support and resistance or even working off trend lines. They are getting more sophisticated. They will never, in my opinion, be as successful as people trading. I've seen bots that can do 1% to 2% on a good month. I'm not really willing to risk, my bank account for that kind of profit. I'd rather do it myself. If it was consistently making 20, 30, 40%, then yeah, I would throw, 15, 20,000 into an account, put the bot on it, and let it run while I trade, manually on another account. Don't have a problem with that. But I just don't really see that as being lucrative. The reason why it seems to crawl back up or follow certain MAs is because there's so many of them. So it's gonna appear to respond to some of them. Who is buying Bitcoin? There's people that are so desperate to believe Bitcoin is going up. And I'm not saying that there isn't some short-term movement that could happen in Bitcoin to the upside, but they're so desperate to go up that they'll go through YouTube looking for people that are bullish. They don't care what they have to say. I just want to hear somebody be bullish, and they will listen to them no matter what they have to say. There's people who do 2-hour live streams, and they don't really explain why. They just spend the whole time talking about why Bitcoin's going to go be bullish. So I can't recommend any bots right now. I don't use bots. I've been asked to review some bots, and we were asked to review a bot on the channel. I wrote them back and told them we'd be happy to review it. I said, but if it's garbage, then we're going to review it as garbage, and they didn't write us back, so I'm assuming it's garbage. You will get access to the Slack group if you purchase the course. Currently, that's how it's working. Eventually here, before the end of the year, but eventually, we are going to be changing that. So any new signups, it will be a monthly subscription where you'll get the course, access to the Slack group, and the live streams will eventually be member only. Just because the community is going to get to the point where we're going to have to focus on the community, and we feel like that's going to be a better way of doing it. But currently, if you buy the course, you will get access to the Slack group for free. Okay, let's look at, someone said Euro Aussie. This is what I'm looking at for Euro Aussie. This is the daily chart. It's important. If you look at the weekly, we're in an ascending channel. On the daily, we're in an ascending channel. We did break out, and then we just developed this ascending channel here. So basically, not really made any progress. But what's interesting here, and a point that I want to make, I mentioned it earlier on in the stream, is the mass psychology. So we have this top, and mass psychology is seeing this as a break. Now, I'm not saying that it can't be a break, but what I am saying is that when you have the masses caught believing this is a break going long, it doesn't take much for that to reverse and catch those longs the wrong way, and they just start building up, and it just moves the market very rapidly short. So people are trying to catch up with the market. So when you see this happen, don't ever get to the point where you see these breaks as concrete, okay? If you break this down to the hourly here, what is the nature of the break? Okay, very much corrective, right? Now, we definitely do have this descending nature, which breaks impulsively. Well, what immediately happens? We drop, we go back up. It's just, we're no progression. We're not making that progression. So most of this channel is ascending. Most of it's corrective. So the chances of this breaking to the downside are extremely high. And here's the great thing about your Aussie, and I'm not saying it's going to happen now, but because we're in an ascending channel, within an ascending channel, a big ascending channel, if this is the one that goes, let me just zoom in so I can actually get a logical entry. Okay, here. I'm going to try and do this best I can from the daily. So I'm going to look at right around a 30 pip stop. Just look at the massive potential here. You know, you have 20% down to here, and the chances of getting to the beginning of the correction is about 90%. That's 31% in just move. If this is the big move and we correct all the way down to the bigger, that's 57%. Now, that's insane. It's not going to just impulse all the way down. We're going to see corrections, bigger corrections. You're going to have to scale in. But the point is, the opportunity for some big moves to happen are coming in Forex. Someone asked earlier, is there anything that's bullish right now? Well, the Euro Aussie has been in ascending nature, so technically bullish. but we're looking at this as a sell. So is there a possibility that this could continue the upside? Yes, there is. We'd be looking for this to just correct like this. If I saw that kind of nature, even more of a steep nature, I'd be looking at possibly to retest this area and then see what happens. I would not be looking at this as a buy necessarily. At that point, it depends on how deep it goes if we have the percentage. If this happens and we get up to this point and then we get another corrective move, that would be the perfect buy. It would tend to be smaller probably, and would be a good scaling or a good entry position. But we have to see how this plays out. If we look at this on the 15-minute chart, it does appear to be a descending corrective, ignoring this area, which there was nothing that happened there, just retraced. If we ignore that and just kind of do this, you know, it does look like a flag. Okay, so we have to see if this translates into the 1 hour chart. But if this is playing out, we could have that one more move to the upside, and then we could sell it, and that could be the big sell. So keep that in mind. That's kind of what I'm looking at. And I know for some of you that's going to sound a little bit ambiguous, like, well, then it could go any way. No, we're just looking for the market to be clear. You know, I'm looking for this, what's happening here, to show up clearly on the 1 hour chart. That's what I'm looking for. It is descending in nature. It's tight descending. But I'm looking for that more corrective coming off here. If we get that, it'll be a nice buy, a potential buy. But I'm still looking at this as a sell. I'm not looking at any long-term buys for Euro Aussie. Let's actually just take a look here. So let's say this corrects down a little bit further, and we get in here. Let's say we get in at a 30 pip stop. Yeah, there's potential to get almost 3% out of that move if we get that good correction. If we were to get in right now, the potential is 1.6. That's why I'm not really looking at a buy. It just doesn't make sense to me right now. Forex has violent moves. Forex has some big moves, but really, honestly, they're usually very predictable. Most of them are very predictable. Last month, we had a move on USD CAD, and it was basically pretty much news related. It was a huge move on USD CAD, and I missed it because it was just noise. It retraced. You know, most of it was retraced shortly afterwards. But it's a huge move. It was just a move you're not going to get in on, most likely, unless you're following the news and trading based on the news. But it's a fluke. That doesn't happen all the time. It rarely happens. But for the most part, these moves are stuff you can catch. So if you're getting wiped out easily, it's either your entry's bad or your stop loss is bad. It's one of the two or a combination of the two. That'd be the reasoning why you would be getting wiped out too easily. If you are in the Slack group, shoot me a message on the Slack group. I'm happy to talk to you about it. If you're not in the Slack group, go to the website and you can contact us through the website, and I'm happy to talk to you a little bit about what you're dealing with. But if you're not part of the group, I would encourage you to buy the course and be in the Slack group, because it will really open your eyes to a lot of stuff. If you can afford that, it would be hugely beneficial. But I'd be happy to talk to you about what you're dealing with, help you understand that a little better. Okay, so that was Euro Aussie. Look at the Dutch bank. I can look at it. I don't do correlation with it because the DXY will pretty much tell you everything you need to know as far as correlation to what Euro USD will do. They work really well together. So if you're paying attention to DXY, it's going to give you the information I believe you need. I can look at this on the chart here. Let's just do this. I haven't charted it, so let's just see what's going on here. Let's look at the weekly for a moment. Okay. So it is kind of interesting. I know one person mentioned it kind of looks like Bitcoin. It does from this point down, but yeah. The important thing with that comment though is going into January of this year, there was a lot of big moves on a lot of stuff, on marijuana, on cryptocurrency, on a lot of different commodities and different things you trade. Just a lot of things boomed going into January. It was just a really good time to be in a lot of different things. Not everything, but a lot. So we saw a lot of those similarities as far as that goes. Let me just look at this on the daily here. I really see, and one thing I don't like about charts like this, and this is the thing with stocks too, is you have a lot of the choppiness because you do have, like Forex is traded 5 days a week, cryptocurrency is traded 7 days a week, it's all the time. But stocks, you have, your daily close, and then you have your weekly, or your weekend, and it's like it chops the market up. And yeah, you can still chart it. It's just a lot more choppy, so I don't really like it as much. If you were to look at this as impulsive, corrective, we'd be looking to go to the downside. So you were to correlate that Euro USD. Let's go back to the chart on the daily. Descending, be looking for this to be moved to the upside. It does kind of fit. It does seem to fit. So yeah, you could probably correlate them. I'm not saying that there isn't potential there. I'm just saying that I'm not sure you need to. And I do believe that the DXY is going to give you the clearest information. But yeah, what they call bubble cycles do happen. It's true. If you're losing money, hodl. I'm not really sure I agree with that, but I'm thinking that's a joke. But what are the best pairs of a successful trader? I think Joe answered that. Silver and gold. Yeah, at the end of the week of Fridays, it's like Friday is usually my least trading, least the day I trade the least on, I guess that's how you say it. Usually I'm closing out the week, going into the weekend. I got a lot going on. We're heading towards 5 o'clock. Things are slowing down. If I'm not in a good trade, I don't tend to want to get into trades just before market close. So, yeah. So if you're trading full time, if you're going to take a day off, Sunday or Friday, I mean, there's good moves that happen on Sunday, but Sunday tends to be a little quieter. You could take off Sunday or Friday, or you could, see what's happening in the morning. If it's not anything decent, go to the beach. Not a big deal. Look at gold. I haven't actually charted. This is silver. Someone asked about silver. Let's look at silver, man. I didn't actually chart this out recently, but let's just look at it quickly. It's kind of interesting. The one thing I will tell you about silver and gold is, I hate to really compare it to Bitcoin, but the patterns tend to be sloppier, kind of like Bitcoin. For instance, you have this bigger pattern here, and then coming out of it, you have the hover, and then the sell. So, yeah, it is there. Most people probably would not have caught that move. You have the impulsive move. you have this move upwards, the move downwards. That's a Bitcoin classic move. Bitcoin does this a lot. It does happen in other Forex pairs. It's just something I do see in Bitcoin and silver specifically a lot. You could get that corrective move like this. That would still be the bear flag. It still is more of a bear flag in my opinion than anything else. However, if we just look at the last part of it, descending nature, it could be a sign for reversal. So that's kind of silver, but someone had asked about gold, so we're going to look at gold instead. So you'll see that was a position I had looked at before. That was actually a position that panned out. It was a bear position. It was a sell. It was a good sell too. That was let's see. I think it was probably right around there. It's about almost close to 10%. That was a pretty decent sell. Then it just reversed and went back up. But looking at gold on the daily here, we have this tight descending channel. It's not sustainable in the long term. So I'm looking for this to change directions. What's interesting is, again, we get this drop down, retrace. I'm ignoring that. Just a continuation of what's going on here. So I'm seeing this more like that. So descending within ascending. I'm looking for this to potentially break to the upside eventually here. If we were to look at it on the weekly, though, which is important, there's a reason why silver is cheap. There's a reason why it is being held back, because silver should be worth much more than it is. I'm just going to leave it at that, but there is a reason why it's so cheap. I don't know why my trading view is glitching here, but it is. That pattern I was mentioning on the lower time frame, descending, ascending, silver and gold do this all the time. What's important is you have the impulse. What does it do here? This is what we want to figure out. What is it going to do from this point out? That's what matters. So is it going to turn into, is this a bear flag? Is this going to continue? We're very impulsive on the weekly. Is it going to correct and continue down? Or are we going to start to get a descending nature on the weekly? This is going to take time to play out, and then be a buy. So right now, gold is on the decline. We came out of an ascending channel. Here's the other thing I did want to mention on gold. Impulse. This could be just a huge, it's possible. Corrections sometimes retrace the complete picture. This could be just a huge correction to continue to move to the downside. If that's true, it's going to show itself in the lower time frames. We don't need to base it on that. Just something to look at. I do believe that based on what's going on here, if we just chart this out really quickly here, just what's going on here on the last bit, I do believe the potential for this to impulse, correction, impulse, and continue to move back to upside. I do believe we'll see that before we head back down. That's just my personal opinion. But just keep in mind, gold can be sloppy at times, and it can make erratic movements at times. So something to keep in mind. It does play out like any other pair for the most part, but you'll get quite often in gold, you'll get these quick retracements and these movements that just move quickly to up or down. It's like you don't always get those clear corrective moves to reverse. It's just like peaks, retrace, and it heads the other direction. So something to keep in mind. That often happens in gold. Do all altcoins follow Bitcoin? Yeah, for the most part they do. If Bitcoin isn't making much progress, they will often forge their own path for a little while. And sometimes you'll get good opportunities to buy into an alt when Bitcoin is not making much progress. But if you're in that alt and it's bullish and suddenly Bitcoin tanks $500, it almost always takes the alts with it. So you really can't separate them. What are we learning in crypto that are bad habits in stock trading? That's actually a really good question. I will address it more to the aspect of Forex trading, because Forex is much easier to get into and trade successfully than stocks for a beginner. The fees are really low on Forex. They're much higher on stocks. Forex is traded 5 days a week. The stock market closes every day. And then on the weekend it's closed. So there's some preference to that. But to answer your question, what are some things? That's a very good question. Let me just go back to Bitcoin here. I just like to be watching what I'm doing or being on the chart I'm talking about. One of the biggest things that people are doing in cryptocurrency and Bitcoin trading that's a bad habit is getting accustomed to sloppy charts, getting accustomed to expecting certain things to always have a specific outcome. For instance, there are some people that are starting to predict big moves based on Tether and BitMEX. And while historically it has been true, what if they shake up their game and they throw you, a curveball? So I would say a bad habit would be focusing on or allowing yourself to see specific things other than patterns and structure as the way it will always be. So that is really a huge one. And I know that kind of sounds ambiguous because it covers quite a bit, but honestly, there is a lot just in that. The other thing is when you see stuff like this pattern here, getting caught off guard by it and getting put off by it. I guess put off is the word I'm looking for. Be like, well, you know what? I'm expecting this to just move like this. I'm looking at this to give me clear signals, and suddenly we get this nonsense. And that's all it is nonsense. But don't get put off by it. Just ignore that. Just totally ignore it. There was no clear entry to enter before this point. So we're waiting for a clear entry now. What's interesting is since we've been doing the live stream, the 15-minute chart here gives you a clear example. We kind of appear to be breaking out of what we're talking about, what I talked about earlier, the 15-minute chart, developing a pennant or, bear flag. Obviously, it's not a bear flag if it's breaking the upside. It's more of a pennant. But is this going to be sustained? That's the question we have to ask. This is the 15-minute chart. Is it going to be sustained? Also, if we look at this on the hourly chart and we are looking at this, I know some people are looking at this as descending. If we're looking at this as descending, then we'd want to see this break kind of up out of the highs. So we're going to need more data, I think, over the next potentially few minutes, but over the next few hours, this could definitely move. Obviously, I've been doing the live stream, so I don't know if Tether got moved or anything like that of that nature. If that happened, then it could be a pump of that nature. But it also could just retrace that and continue its corrective movement. So there's no reason, in my opinion, to be in this trade. Like, if you're in this trade, I don't see a reason to be in that trade. I don't see a clear reason. So I'm not going to sit here and tell you, oh, you should have known that was a pennant. It was going to break the upside. I don't see a clear reason to believe to be in that trade. If you do completely ignore this, you might say this last part is more descending in nature. But again, we broke the downside then up. There's not a really good reason to be in that trade. it's totally possible to make $100,000 in Forex. It's, you know, it's totally possible to make $1 million in Forex. It's not going to happen most likely for you in months. It's probably going to take you a year or two. But I guess the question is, are you okay with putting in a year or two of effort to make a few $100,000 or to make $10, $20, $30, $40,000 a month? Are you willing to put in that effort? It's going to take some effort. It's going to take some time where you're not making money in a month from Forex while you're learning it. There's people on BitMEX that are making tens of thousands of dollars a day. I don't think most people can do it. I think most people would lose all their money on BitMEX. It's very sketchy. It's very hard to trade. You have to be very careful and know what you're doing. Trading BitMEX on BitMEX, Bitcoin on BitMEX versus trading Forex is like night and day. It's like Forex is just so much safer. Yeah, let's look at the RSI divergence for you on the 4-hour. We need to wrap this up here shortly, but I do want to do a short Q&A. I know we're running up on 2 hours, but I think we started a little late anyways. All right, so 4-hour. Yeah, definitely start small. Start paper trading. You know, start paper trading. Let's see, the 4-hour divergence. I guess you'd be talking about this. This has a 4-hour divergence. Yeah. Something that's definitely could play out. It could be what is playing out. Like I said, divergences do play out fairly well. So if you are going to look at RSI, it's something you look at, but they don't always play out. So I would want more information on the chart to make a trade. I won't make it just on RSI divergence, but it's a good confirmation. All right, so I guess we'll go into a little Q&A. Maybe I will look at another chart here, but we'll just go into short Q&A. If you guys have other questions related to the chart or anything you want to ask. While you guys are asking some questions, I will just look at British Pound USD quickly. Yeah, I can do XRP quick. So descending channel. Within that descending channel, we have this impulsive move and then the corrective move on the 15-minute chart here. Let me delete that. What I'm looking at, I'm not even sure why that looks like that. That should be actually a drawing, and it's just like a line. But anyways, this is pretty. This is looking like a really good setup here. I mean, like this could really, literally just play out shortly. You have the impulse, ascending nature, and it's just looking like a really nice tight correction for a sell. I mean, honestly, this is something I'm really looking at. If we look at the potential here, we get in, and let's see, we can get in. We're going to do a 20 pip stop. I mean, that covers us really well. Just the bottom down here is almost 5%. That's like a really good move, and the chances of getting down to the bottom is really, really good. If we drop down to where our trend line would be, you're looking at between 10 and 15%. So that's looking like a good setup. It's got huge potential. Beautiful correction. Yeah, definitely looking at that. So that's something to consider. Can you give us insight in silver, USD, and gold silver ratio? You mean gold to silver ratio, or ratio as far as shorting or going long? Is buying the dips profit roll to stay on the safe side? Not sure I understand your question. Is buying the dips profitable? Probably you meant profitable to stay on the safe side. If that's your question, you'd have to define the dip. Have you got a clear reversal? If you've gotten a clear reversal, then yeah, buy it. Buy the dip. Okay, good question. When do we take a trade? Is it on the impulse? Good question. Let me address this on this chart. And then everyone's going to go and try and copy this. So, you need to make your trades based on what you're looking at. But this is a very tight correction. It's possible that this could develop something different, could get bigger. It's totally possible that could happen. But it is very tight, so it does give us a good opportunity. So something like this, what I'd like to see is if this comes back up to the top, and then we get a retrace candle. I'm going to get in on that retrace. I might get in even before the retrace if I start to see it retracing, but I'm probably going to wait for the retrace, especially on the 15-minute. Wait for the retrace to happen. It's going to be the safest. If we're looking this on the hourly, let me adjust this out here a little bit. It looks like a nice flag. On the hourly, right now we have 3, 4, 5, 6, 7, 8, 9. About 3, 4, 5, 6. We're right about at the area. We got between 6 and 9 hours of decent correction going on. If we do get that next movement to the top, I would definitely be getting in there. On a short, that's just what I'm looking at, unless there's something else going on in the chart that would, give you a different impression. But this is looking like a good setup. It's looking really clean. But that's how you do it. And then what you would do is, so it moves to the upside. So it goes to the top, and you get that retrace, and then you're on that retrace. You want to set your stop so it covers you if it impulses back up. This is 14 pips. I will not trade less than 20 pips just because of spreads and erratic movement. You can get stopped out. Like the wicks. The wicks can stop you out, and you don't want that. So this covers me up to here. It seems like a decent amount. That's 20 pips. You might do a 30 pip if you're really conscientious and conservative. I'm going to do a 20 pip. That gives me to the bottom almost 1%. That's not what we're looking at, obviously. We're looking at down to here. That's 5.5%. It's a really good trade. And the chances, if it breaks impulsively, of it getting here are extremely high. And the possibility of going lower is definitely really high. So, decent trade, a good entry, good possibility. I would wait for a retest of the top. It could go from here. The other possibility is on the 15-minute chart. It could just stay and do a tight correction here and then drop. If it does that, you could get in at the bottom. Well, let me actually put that back. And if you get in the bottom, this is what changes your percentage. We'll get in, so around there. That'd be 26. That is if we catch it at the top. If we're catching it at the bottom, we're looking at more like a 30 pip stop. Not terrible. And it's glitching on me again. So that's 3%. So we lose about 2%. So timing is, that's fine. You still get 3%, it's fine. But the timing is everything. And it helps define how much profit you can get out of the market. So hopefully that answers your question. I'm going to do a whole video on stop losses and entries. There'll be separate videos, but we're going to do videos on that. Show me a chart and tell you the news, and I'll tell you the news. Okay? We're on British Pound USD. What's the news on British Pound USD? On Markets Live, are they legit for trading? Are you familiar with... Neither me or Joe is familiar with iMarkets Live. Excuse me. I'll try to look them up and see. Actually, I'll just put that in Google so it's there. I'll look at it later. ADA and XRP people want to look at. Maybe we'll do that in a minute. I gotta go. Take it easy, Royal. Have a good night. Everything will get wrecked. BTC going a bit nuts. What's BTC doing? Yeah, it's not making much progress. All right, mostly in fiat, waiting for 70.57. Do you see the inverse of BTC and DXY as valid? The inverse of BTC. I'm not exactly sure what you mean. Are you talking about comparing DXY to Bitcoin? Christopher Campbell. Yeah, I'm not really sure what you're referring to. If you could elaborate on that, I will try and answer your question. But the inverse of BTC and DXY, if you could elaborate, please. All right. While we wait for you to elaborate, if you're still here in the chat, Christopher, I will look at quickly XRP. I haven't looked at XRP since our last live stream. I'm just going to be honest with you. Like I said, I haven't been trading alts. I've had good opportunities in Forex. I just really haven't needed to spend time elsewhere. Okay, let's look at, it's still in descending channel. Let's look at 4 hour quickly here. All right, so this, what we were looking at before, it did break. Okay, it did break to the downside, but we're not getting much sustained movement. All right, okay, so looking at this, descending, we got to see again how this plays out, what it's actually developing. It could do that, and it could turn into a bear flag. But this could just be a reversal, and we could just be seeing this move to the upside. But that pattern we were looking at the last live stream did play out. It just didn't, it wasn't sustained. It didn't move bigger. What's interesting is you could have looked at this as a bear flag and a break. And if you were still in from the top, when you've seen it come up here, you might be looking at, okay, it's not having the momentum to carry it on. So you might have taken that as an opportunity to get out. Not saying it won't go lower, it could correct lower. It's a possibility. We are in a descending channel within descending channel. We broke out of a descending channel within the descending channel, but it wasn't sustained, and then we are creating what appears to be another descending channel. If we create this come on here. We create this descending channel like this. If we go back to the daily, then it doesn't show up on the daily, but I'd be looking for a buy opportunity. If we go to, let's look at the 1 hour quickly here. Yeah, definitely very descending in nature, not any real progression in the market as per se. Again, this could turn around a little bit and turn into a bear flag. We can look at that, but right now it's looking descending. So I'd look for more information. I'd wait, maybe a day or two for this to fill out and kind of give us more information on what it's doing. Back to Christopher Campbell. The charts are inverse, even going back to 2014. They're inverse of each other. I would actually have to chart that. You mentioned it. I know I've heard people mention that before, but I would actually have to look at it on the chart. I mean, I guess I'll just tell you, I haven't seen that. I haven't looked at it myself on TradingView, so I'd want to do that. As far as seeing it as valid, I guess I would see it as an interesting phenomenon. I wouldn't see it as necessarily valid, because you'd have to ask a question: how does something like the DXY, which is based on heavily on euro, like almost right around 50%, right around half of the value is based on euro. And then there's other currencies that factor into the DXY. So for those of you who didn't know that, the DXY isn't the actual value of the USD. It's the value based on other currencies, which actually gives it a better view of what the USD is worth. But I guess my point is something so massive as the DXY, as the USD, that's based on other massive currencies like the euro, or that are factored into that calculation, to be correlated to Bitcoin inversely. I guess I'd have a hard time understanding how that would actually be. I guess it would insinuate, if that was true, that when USD goes down, people are putting money into Bitcoin, and I don't really believe that is happening. If it was happening, then I think we'd see... Again, I'll look at that for you. I'll definitely look at that, and then we can talk about that the next live stream. As far as the real bottom for Bitcoin, nobody knows how far Bitcoin can go down. And honestly, it can go down quite a ways. I mean, it could go down to zero. Not likely to go to zero. BitConnect isn't even zero. But, so as far as what's the real bottom, the real bottom is where we're at, the last bottom we had. So the last bottom we had was, 6,100. That's the bottom right now until we make a new bottom. As far as trying to call bottoms and set bottoms, it's an emotional way to trade. And it's not a really good way to trade because it sets you up for wanting that bull run. And when we finally do get that sustained, if we get that sustained impulsive bullish movement that everyone's wanting, it's going to set you up to be blindsided if that turns around. All right, I think we're going to wrap it up here. I'm going to give it just a couple more minutes. If you guys got any important questions on your mind as far as charts, anything you want to ask us, if I missed your question, feel free to drop it again. I didn't intend to. I'm just going to keep this open for a couple more minutes, and then we're going to close out the live stream. I hope we were able to answer your questions, give you a little bit better picture of where Bitcoin's at. We are looking for more movement. We will be doing a video as Bitcoin develops, so look for a video here coming into the week. Right now, what are we doing? Well, if we look at the 15-minute chart, it's pretty much sideways, but it's just correction. So we're looking for clarification in this correction where Bitcoin is headed. I know people keep asking at the live, every time we do a live stream about Qtum. So let me do that quickly. Let's see, which one do we want to use here? We'll do that one. That's messy. Did you want... Which one were we talking about? Like... Okay. Wasn't sure. I'm assuming it is. Let's try the other. Okay. Yeah, there's not a lot of data here. That's one of the issues. Let's see. We got to define the trend, and we don't have much data to do it in. So this is a case where we are developing a pattern. We could see that as the old structure that would have obviously been broken, so we would be reining that in. That doesn't really give us a lot of clarity, but the only thing it really does for us is give us that flag for that sell that does happen. But we've been pretty much selling since then. The one thing that's interesting is very impulsive, then corrective movement, quite impulsive, corrective movement, not so impulsive, and now we're in this area where it's just quite a bit. Corrective, just really tiny movement. So the momentum is slowing. The important thing is we went from 25 bucks down to, we're at what, $3 here. We look at this on the hourly chart. Let me just see how this is playing out. Quite corrective. It's been quite corrective. So impulsive movement down, flag. We do get the sell. It comes back up. This could be developing one of two things. This could have been a reversal. It looks like the possibility of a reversal. If it is, we're going to get confirmation. This looks like a nice bear flag. I always say bear flag. All flags are bear flags. But anyways, bull flag. If that is true, we could see that break to the upside. Important to note, if we get that break and it comes up to this area, it still could be a large bear flag to continue down. So still, it's understanding that the patterns can develop bigger patterns, but if this is a reversal, then we would be seeing another impulse off that. So you could wait for that, wait to see the correction, and then see what happens. The other thing is, this is descending in nature. So to see it reversed at that point, correction, breakthrough, that's not unlikely. The one reason I believe that it does have so much volume is that it is heavily, it's used heavily for money laundering. That's my opinion. I can't really prove that, but it is my opinion. Just a couple more questions here. Do you use RSI and stock RSI? Don't use RSI or stock RSI really anymore. RSI, as we mentioned before, is good for divergences. Divergences play out really well. Other than that, RSI and stock RSI don't give us a ton of value, in my opinion. They give us more noise. You don't need them to trade successfully. Often RSI doesn't make a lot of sense. Like I said, divergences, really good, but that's it, in my opinion. Every impulse up I short right after, so far so good. Most impulses, you get a retracement. So, a lot of people jump in on an impulse and they'll, but shorting an impulse can play out just because if you get a big impulse, you're going to get a retracement. I mean, it's not the kind of trading I would do. You're not going to make big percentages on it, most likely, but it's probably better than jumping in on an impulse with an impulse, honestly. Yeah, just to reiterate what Joe said, we don't have coupons. The course is as cheap as it ever will be. Coupons tend to be gimmicky, and the people who do coupons are just trying to sell their courses. This is going to sound wrong, but I really don't care if we sell more courses or not. The only thing I really care about is building up a community of traders that want to be consistent and profitable. I know this is going to be a long time in the future, but there's the possibility of eventually starting an actual trading floor where some of you guys that have been with us for years at that point, we can get together and trade together. We can actually have a trading floor. It's something we ran around in the back of our minds. But no, it will never be cheaper. It's not going to happen just because it's a good deal the way it is. All right. I think that'll be able to wrap it up. I don't like to keep these going too long, and I know some of you guys have to get to bed. But do appreciate each one of you joining. Appreciate the questions. If you have questions that you think of and you always forget them before the live stream, just jot them down. Put them on a sticky note in front of your computer, and then when the next live stream is, you have them to answer. Or you have them for us to answer. But OBV indicator, yeah, I don't see a lot of value in it. I know people use it to quote-unquote tell when smart money's coming in. I don't buy it. I guess because I do know that it's not really true, but I'm not saying it doesn't have merit. It's just, I guess it goes back to the thing. A lot of indicators are just going to get you in trouble. So that'll about wrap it up, guys. Thanks so much for joining us. Don't forget to, I don't know what I was going to say. I guess don't forget to put time and effort into trading. That's, just in the charts, learning the charts. I guess that's what I'll say. Just put in the effort, guys. Back test, chart till you're blue in the face, and it will pay off. I promise you it will pay off. Just put in the effort, and it will pay off. Thanks so much, guys, and have an awesome evening.
You can't be scared to die for the truth. The truth is the only thing that's ever going to be constant. I have a great time with my life, and I want to share it. I love living. I think that's infectious. It's something that you can't fake. Greatness is not this wonderful, esoteric, elusive, God-like feature that only the special among us will ever taste. It's something that truly exists in all of us. It's very simple. This is what I believe, and I'm willing to die for it. Period. It's that simple.
I know who I am, and I know what I believe.
I know who I am, I know what I believe.
That's all I need to know.
And that's all I need to know. So from there, you do what you need to do. And I think what happens is we make the situation more complex than it has to be.
Because we're looking for complexity. There's got to be something complex to understand.
It can't be that easy.
No.
I study the patterns of the universe. There's a redemptive power that making a choice has, rather than feeling like you're at effect to all the things that are happening. Make a choice, right? You just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's water. It wants to move and go around stuff, There's a flow of the universe that I've grown to know just how to go with it. I'm motivated by fear.
Fear.
Fear
of what?
Fear of fear. I hate being scared to do something. I started attacking things that I was scared of.
It was Franklin Roosevelt said the only fear you have to fear is fear itself.
Absolutely.
Remember that?
Absolutely. You can't be scared to die for the truth. The truth is the only thing that's ever going to be constant. I have a great time with my life, and